every Tuesday at 4 p.m.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer. Live United. Go to liveunited.org. Brought to you by United Way.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Apply for Social Security and Medicare. Mike, one of the many questions that people have as it relates to Social Security and Medicare is, what's the difference in terms of how much I earn based on when I apply?
Yeah, and there's plenty of confusion around all of this because the ages have changed over the years as we've made reforms to the Social Security program, and there's different ages for Medicare and Social Security. So first things first, for vast majority of folks now, 67 is the current full retirement age for Social Security, whereas 65 is the eligibility age for Medicare, and then you scale up or down your benefits depending on how much earlier or later you claim when it comes to Social Security.
An important thing to note, you don't have a do-over on this. Basically, when you claim Social Security, that is what you are locking yourself into. The programs where you used to be able to adjust that, they haven't been around for a while now.
No, and so, for example, if you end up claiming your benefit at 62, in addition to having penalties for how much you get in earned income, you're going to be collecting about 30% less than your full retirement benefit, whereas if you wait all the way until age 70, you'll be collecting about 124% of that full retirement age benefit.
Our guide is titled How to Apply for Social Security and Medicare, and there are 2 ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, kicking off 2026. I hope you all had a fantastic New Year's Eve. A good New Year's Day as well. And
Anybody actually make it to midnight?
I did.
Did you? Good
Yeah.
for you.
Yeah, I made it to midnight London time.
About 10:30. Yeah, okay. Fair enough.
7 p.m., like you called it.
Yeah.
I know. I made it to midnight. Like, generally, at this point in my life, I get to somewhere around 12:30, 12:45 in the comfort of my own home without having to deal with other humans. Because quite honestly, look, I'm not really a New Year's person. I'm not.
Same.
I don't believe in New Year's resolutions. To be completely honest, I don't think New Year's should be on January 1st.
It's pretty odd for the guy who's wearing a toupee on January 2nd, okay?
It's fine.
I don't believe in New Year's resolutions. Okay, Chuck.
It's fine. No, like I don't like I didn't make any.
Okay.
I'm not I find that it's better to try to build repeatable processes during the year than be like, well, this is the year I'm going to change, because look, we've all seen The Sopranos where Tony almost dies. Spoiler alert. And, comes back and is like, oh, I'm going to be different. And that's, a whole part of a season and everything. And then it turns out, gee, it's kind of hard to change as a human.
Yeah.
And so trying to have this, epiphany that, wow, it's 2026, I'm going to be a different person. No, I'm not going to be a different person. I'm going to keep being me and hopefully be a better version of me that I can get to through, some things that I might actually want to do to improve my life instead of hey, this is going to be the year that I exercise. Well, no, the gym's just going to be crowded with everyone today, and it's going to dissuade you from going back.
And you're going to eat Doritos in the car instead, right outside the gym parking lot.
Which is why they have those vending machines there. So let's talk a little bit about 2025. And big thing, 2025, if we're being 100% honest, didn't go the way most people were expecting.
Yeah. Nor does that a year, but yeah.
If you talk to people this time last year, January 2nd, the stuff that people were talking about was, hey, we're going to see, a bunch of deregulation. We're going to see a bunch of tax cuts. It's going to spur a bunch of spending, and that's what's going to, drive the economy. In fact, what we ended up getting was...
AI was still in the conversation, too.
It was, but there wasn't a ton of conversation about it. The thought was hey... the Trump administration is going to reinvigorate the economy with X, Y, and Z.
Yep.
And while it is true that we got the tax cut piece, okay, it was largely in kind of a different format than I think a lot of people were expecting initially. The other piece is I don't think a lot of people, and actually I know that a lot of people didn't have tariffs on their bingo card because the market was pretty surprised by all these announcements of them in the first third of the year.
20% market pullback to... display that pretty clearly.
Correct. So I think that, it was something where ultimately looking back, you now sit there and you say, hey, the S&P made, a little bit north of, 16%, and the Federal Reserve cut interest rates a few times. And okay, like sure, like that's stuff that, is pretty close to what was projected. But this is why I think that the path matters, is because if all you do is say, hey, S&P earnings are going to grow 10% this year, stick it on your dartboard, and okay, the S&P is going to get to 7,400. Well, that doesn't really tell you anything about the path you had to take to get there. And the path is what matters for short-term traders. And for long-term investors, the actual number from one year to the next doesn't matter because you're just saying, no, I'm looking at it long-term.
Agreed. I will also say, yes, plenty of investors kind of missed what was going to be the theme this year.
Yeah.
Have we ever done a show in the
Yes.
beginning of the year where we're looking back at the previous year when markets are up in the previous year, right? I want to, caveat that, this only really applies to when markets are up. But has there ever been a year where we're talking about it like, oh, yeah, everything was perfect and it just stayed perfect all year? It's always, hey, there's these list of issues that investors are going to need to overcome, and markets are going to climb that wall of worry and move into a different place. And go back and look at the records, right? We had the bank failures in is that 2 years ago? 3 years ago now? 2023.
3 years ago, yeah.
Yeah. There's always a wall of worry that markets need to climb over in order to see this positive return. And in the years where things fall apart, it's usually the case that, wow, almost nobody saw that one coming.
I'm less speaking to the wall of worry and more like, hey, were the things that we saw things that we expected to see or not? Like,
right.
2021 was very much, this is exactly what you expected to see. Hey, we pumped a bunch of money into the economy, and now we're going to see what happens as, society tries to reopen. It was basically what everyone expected. Markets went nuts, prices started rising, and that was, kind of what you saw in 2021. The last several years have had, kind of a more complicated relationship in that 2022, I don't think there were very many people, heading into it who were like, yeah, we're going to see this Russian invasion of Ukraine and, the Fed's going to hike interest rates 5 points and, blah, blah. No, there weren't a lot of people there. 23, if you'd asked people at the beginning of 23, hey, what are going to be the big themes? I don't think anyone would have said there's going to be a bunch of bank failures in the first part of the year. Not a bunch, but a handful of, still sizable ones.
They definitely thought that the inflation scenario was going to be worse than it turned out to be. The miraculous disinflation of 2023 was kind of a defining factor.
And no one had AI becoming what it is today as quickly as it is as something that would affect markets then. So, yeah, I think that when you look at this, I think it's important to set the stage now for what are expectations for 26? Because this is ultimately what matters and what influences how markets move.
Because what everyone's talking about will be the main things in terms of markets, at least. I think the primary one continues to be artificial intelligence, probably followed by expected changes from the Federal Reserve. If you ask investors, what are they focused on, I tend to think those are them. I mean, unemployment plays into that, inflation plays into that, but those are kind of the major themes. We're not expecting some major tax bill. We're not expecting some major political reform. Yes, it's an election year, but there's no big expected changes there to Social Security, to other factors. And so that's, I think, kind of the expectation. And quite frankly, I'd be very surprised if we're sitting here this time next year and saying, oh, yeah, it took place kind of exactly the way we thought it would.
Right. The other items that I'd say, are expected right now, it's expected that the tax changes from last year are going to provide a spending boost this year in the form of larger than normal tax refunds and things along those lines, business CapEx deductions, things like that, driving additional economic activity. I think that's part of it. I think that when we look at housing, I think the expectations are that housing doesn't really shift its course from the last couple of years in any meaningful way, in that it's not a driver of a ton of new economic activity, but it doesn't fall apart like in the run-up to 2007, 2008 either. I think it just kind of muddles along is the expectation, more or less. And on the employment side, this is the area where I do think you get some divergences in terms of views. There's one camp out there that says because of that additional spending that's going to be driven by tax changes, okay, that's going to drive better employment. There's another group that says, hey, the economic data is not really showing any meaningful shift, and generally the best predictor of where employment's going to be is where it's been, and so kind of a continued muddling through of employment is what you might expect. And then there are people in the camp of, hey, we're on the precipice of something horrible happening in the labor market, and this is going to be the year that it finally falls apart. And I think that that's one place where we look at labor where there is a pretty big divergence of views as to how things can play out this year. And
sorry, go ahead.
No, and I was just going to say, and I think that is something that unfortunately tends to have a big impact on the economy because consumer spending is typically driven by employment income. And so given the wide range of possibilities for labor, I think there's a case that this is one of the more unpredictable years that you could see for the economy.
Last market directly related piece here. When I listen to interviews with major market analysts or leadership from companies like Schwab or Fidelity or others that get interviewed regularly about the markets, what I keep hearing about is for the theme of 2026, very few of them saying, oh yeah, AI-related company is going to have another 50% a year and that's going to drive it. I keep hearing the broadening out of the stock market returns. Not sure I buy it, but that is definitely a theme I hear pretty consistently, at least through the optimists, about where market returns are going to come from in 2026 is, hey, returns are going to broaden out from what has been a hyper-concentrated market for the next 3 years. And yeah, not sure I buy it, but that is definitely something that I've been hearing a lot of.
Let's discuss that. We need to take a quick break, but let's discuss that in a little bit more detail. Will we see a broadening out of this market next year? This year, I guess.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. This is a message for families who've been putting off their estate planning from the elder law attorneys at Cushing & Dolan. One of the biggest myths about long-term care is that if you didn't plan 5 years ahead, you're out of options. That's simply not true. When a health crisis hits and a loved one needs nursing home care, many families panic and start writing checks for care that may cost over $10,000 a month. The reality is, there may still be meaningful legal options available, even when planning starts late. Cushing & Dolan have just released a new guide called Long-Term Care Planning for Procrastinators. It breaks down what the 5-year look-back really means and what steps can still be considered before making decisions that can be incredibly costly. If you're worried about protecting your family and securing your financial future, call Cushing & Dolan at 866-848-5699 to get your free guide today. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Planning is well underway for the 2026 DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
All right, so Mike didn't raise the question, but he noted that a lot of analysts that are paid an awful lot of money to look at stocks are saying, hey, we're expecting to see a broadening out of
equity market returns.
Equity market returns.
Can we define that, by the way? Because, I mean, it seems intuitive, but, the S&P 500 for the last 3 years now returned, 88%, I believe, for the last 3 years cumulatively.
Sure.
Over half of that has come from the Mag 7. So it's been a narrow. If you own the S&P 500, doesn't really make a difference on paper. You participated in that 88%, but over half of it came from the Magnificent Seven. When we talk about a broadening out, you're talking about other participants other than the top 7 companies in the index participating more in that overall contribution to net return.
So what I want to do is I'm going to look, and this is from FactSet's Earnings Insight published on the 5th of December. And I'm just going to look at Q3 of 25 earnings because it's the closest we have to what have
Current
earnings
state
done for the last year.
Yep.
So year-over-year growth rate in earnings by sector.
Got it.
Infotech up 28.9% year-over-year. Financials up 23.5%. Utilities up 23%. Materials up 20%. Industrials up 15.7%. Consumer discretionary up 8.1%. Real estate up 6%. Healthcare up 5.3%. Consumer staples up 0.9%. Energy down 0.4%. Communication services down 7.8%. So ultimately, I'm a big believer when it's all said and done in what Larry Kudlow has always preached about stocks, which is earnings are the mother's milk of stock prices.
Sure.
The reason why stocks in the U.S. historically have gone up is because earnings have historically gone up. Generally, you look at the history of it, earnings growth in the U.S. has been around 7 to 8% annual growth over the long term. Stock returns have been a little in excess of that, but that's because multiples have expanded over the last 100 years. It's just how it's gone. There are potentially valid reasons for that. There are reasons that you can believe it's not valid, but this is how we get to where we are.
Yep.
So I think that when you look at this and say, why would I expect markets to broaden this year? FactSet's latest earnings insight update from the 19th of December says Infotech earnings projected to grow another 28.6% next year.
Okay.
So that's again, back-to-back 30% earnings growth.
Yep.
Again, mostly driven by
AI.
NVIDIA. Materials up 22%. Industrials up 15.4%. Communication services up 11.8%. Consumer discretionary up 11.2%. Financials up 9%. Utilities 9%.
These are the expectations.
Expectations for next year.
Okay.
Healthcare up 8.9%. Consumer staples 7.3%. Energy 7.2%. Real estate 5.2%. So the reason that this is being said by analysts is because there is a broadening of earnings growth that's being forecast.
Why might that come? Again, when asked why it would happen that way, I point to two things: lower interest rates and stimulus from the One Big Beautiful Bill Act.
So this is also now when we get to go and do the fun thing, which is, hey, let's see what they projected last year. Because, isn't that kind of interesting? What are you, what did you project for earnings growth last year? Now, I have no idea what I'm going to find here. In fact, I'm looking for last year's numbers right now, and I'm struggling, but I know I'm going to get there. So, ultimately, it's a question of, hey, how accurate are these analysts in being able to project where earnings growth is going to be for the upcoming year? Is that something that they have skill in doing? And here we go. I've got it. Told you I'd find it. So, Mike, do you know what was projected for the S&P 500 technology sector's earnings growth this year?
20%.
23. Pretty close, right? And so analysts projected 23. They came in at...
We got
what did I say? It was 28, something like that?
Yeah.
I really need to pull that. Hang on. Let me pull this other one back up so that we can do the math on the air, because it's what we're going to do. So analysts projected 23. They got 28. Okay, that's pretty close. It's not perfect, but it's pretty close. Let's now take a look at the sector that did second best this year. Financials came in with 23.5%. Again, this is Q3, so I know it's not full year, but just hear me out. 23%. Financials projected at 8.6% year over year. Big miss to the downside on financials. Okay, that's cool. Next up on the list, utilities came in with 23% earnings growth year over year for Q3. Utilities were projected to have 9% earnings growth for the full year. Okay, a little bit light.
Yeah.
Next on the list, materials came in at 18.9, came in at 20.1, projected 18.9, almost spot on. Nailed it on that side. Industrials came in at 15.7, was projected at 19. So industrials came in a little bit light. Nothing huge, but a little bit light. Consumer discretionary came in at 8.1, was projected at 12.5. Light. Real estate came in at 6, was projected at 4.7. Touch high.
So, I mean...
Hang on.
Okay.
We're almost there. Healthcare came in at 5.3, was projected at 20.7. Big miss to the downside on healthcare. We've got consumer staples, 0.9. Projected was up 5.6. Big miss to the downside. Energy was flat, projected 6.1. Communication services down 7.8, projected up 15.5. More on this. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets were starting off 2026 on a positive note in rally mode, where the Nasdaq was up over 1%. However, since the open, gains have been erased and are in mixed territory. How about that? Right now, the Dow is off by only 16 points. S&P 500 is up over 0.2% or 15 points higher. Nasdaq up 0.4% or 95 points higher. Russell 2000 is up 0.2%. 10-year Treasury yield is up 2 basis points at 4.175%. Crude oil down about 1.33%, trading at $56.66 a barrel. Tesla down by 1% after the EV maker reported just over 418,000 vehicle deliveries in the fourth quarter, down 16% from a year ago. Wall Street analysts were expecting about 426,000 deliveries. Sticking with auto, where Chinese car maker BYD saw its sales growth slow significantly last year, but is still set to top Tesla as the world's biggest EV maker. BYD stock climbed over 3% higher in Hong Kong. Separately, Chinese EV makers Li Auto and NIO also saw gains after reporting solid vehicle deliveries last month. Meanwhile, several furniture stocks garnering attention after President Trump delayed a 30% tariff hike on upholstered furniture, kitchen cabinets, and vanities. Wayfair and Williams-Sonoma are up over 3%, while RH shares are up 5%. Elsewhere, the U.S. granted Taiwan Semiconductor its annual license to import its equipment to China, sending the stock up nearly 4%, and Warby Parker is up about 1% after Loop Capital named the eyeglass maker one of its top stock picks for 2026, citing the firm's expanding EBITDA margins. I'm Tucker Silva, and that is Wall Street Watch. And remember, you can watch the show live every day on our YouTube page. We'll have breaking business news, and all of our content is also archived. So if you want to go back and see an interview or a discussion about a specific topic, it's all there with the click of a button. Just search the Financial Exchange on YouTube and hit that subscribe button.
Do you know there is no Warby Parker?
What do you mean?
There's no man named Warby. It was not founded by Warby Parker.
Okay.
Kind of bothers me a little bit.
Yeah, where'd that name come from?
It actually comes from two characters in, I think it's a Kerouac novel. But it's like a amalgamation of their names.
I mean, honestly, I will take that name over all of the other company names that we've been seeing over the course of the last 2 years.
Like Meta?
From Meta to HBO Max plus minus.
Right, at least it doesn't have a plus in it.
And then, all of GE's.
Does Warby Parker have a Warby Parker plus,
Probably. Like GE Vernova. Like, yeah, I'll take this one over those silly names that were.
It doesn't look like there's a Warby Parker plus.
Okay.
So, which is surprising. I actually feel like eyeglasses are something where you could run a very successful subscription model.
Sure. Especially those fashion enthusiasts.
Right, like you get a new pair every year for the same price or something like that. Like I feel like you could do that, but I digress. Do we want to do any further conversation on broadening of earnings?
So I think the point that you were making earlier, which if you missed, was that analysts, when they are looking at their projections, they're oftentimes not that close to what comes in, and oftentimes, in the aggregate, they're usually companies usually beat expectations, but when you look at sector by sector, that is not quite the case. And if you expect, again, there's a few reasons I could genuinely see for a broadening out to occur, but right now the main thing that I'm hearing it thrown out there for is to justify a continued market rally without putting all the weight on AI shoulders, which people are becoming suspicious of.
Well, I think the case that, again, it's one of the ones we discussed, which is, hey, households in the aggregate are probably going to have somewhere in the ballpark of an extra $50 to $100 billion to spend as a result of the tax bill and additional, deductions and things like that they get.
Yep.
Now, in terms of where that shows up, is a lot of that going to be going to, the family of four that makes $60,000 a year? No, there's not as much going there. that money will get spent. Will the person making, $2 million a year that gets an extra, that gets an additional Section 199 deduction on their LLC that they run, will they end up spending that money? Maybe. And if they do, that could still be what powers the economy through.
Has been the last
through
few
this
years.
K-shaped, phenomenon that we've talked about. But that's the case for the broadening is consumers are going to have more money to spend and they'll spend it. And businesses are going to invest more because of the bonus depreciation they get. And that's how you're going to see a broadening.
One other item that we will be discussing later in the show would be tariff related, which, again, I don't think tariffs are going to be the most talked about item this year, but the trend over the course of the last 6 months has been a weakening of tariffs on imports from outside the United States.
Yeah.
And so, if you have this, and when you point to, hey, who has been really hurt by the tariffs, it's been small businesses. It's been small companies, some of which are publicly traded, most of which probably are not. So, hey, if you're going to see some broadening out, could some benefit come from the cancellation or reduction of tariffs over the course of the next year? Yeah, maybe that's a factor as well.
So I think that's enough on that side of things. Do we want to talk a little bit about the Fed, who we might mention a few times this year?
Yeah, I think we should. So for everyone's mind, the May timeframe is the turnover when Jay Powell will be ending his term, and the new pick from President Trump will be heading in there and leading the Federal Reserve. Remember that the Federal Reserve is a committee of 12 voting members who make interest rate policy. Both of the major contenders for that chairperson role have been very public about their desire for lower interest rates. It's why they were selected for the role, is because they tend to align with President Trump's own views on interest rates. And I think, I don't know what the expectation is there, Chuck. I'm not sure how. I don't personally think that interest rate setting policy dramatically changes from the new pick versus what Jay Powell has already been doing. But clearly you are going to have a new Fed chair that is at least publicly calling for much lower interest rates and pressuring other Fed members to do so.
Here's the piece that's going to matter. It's what happens versus what is priced in.
Yep.
When we look at the board right now for 2026, by the last Fed meeting, which is going to be December 9th.
Good. Put it on the calendar.
Yep, it's on mine as well. It's a great day.
Right.
Right now, when you look at where we stand, Fed funds rate is at 3.5 to 3.75%. 2 cuts are projected this year. So really, the question that is worth asking is, when you get a new Fed chair, who is most likely going to, not most likely, who is almost certainly to have campaigned on lowering interest rates, are they able to convince the rest of the open market committee to lower rates more than is what is projected right now?
Right.
That's what matters to markets. If you get 2 cuts this year, but it's priced in,
doesn't matter.
There's nothing better. It doesn't do anything. It's kind of like, okay, if AI earnings had come in, if tech earnings had come in at 23% growth this year, okay, that's what analysts were projecting. They've come in closer to 30%, which has given you additional upside. Expectations matter. So if you get a situation where the Fed is able to say, yeah, new chair, Kevin X or Kevin Y, is in here and is, able to get the board to say, yeah, we want to cut interest rates to, 2.25%. Okay, that's a fundamental difference. But it also comes with the caveat, hey, was the reason they were able to convince them to cut rates that much because the economy weakened more than people expected? And so those cuts were viewed as, more warranted than prior? That plays into this as well. So I think that where I tend to land is there is an awful lot of institutional inertia at places like the Fed.
Institutional inertia. I like that.
Yeah.
Okay.
And I view this through the same lens as, hey, when Scott Bessent became Treasury Secretary, last year he spent the whole year being like, Janet Yellen, I don't like what you're doing. Janet Yellen, I don't like what you're doing. And he came in this year and basically has done the exact same thing that Janet Yellen was doing as far as the mix of short-term versus long-term treasuries. Some of that's inertia, and some of that is you take a look at the situation and you're like, oh, if I push the wrong button, I'm going to get blamed for, problems. Yeah, I better keep doing, what's been working. And I think there's a certain amount of that at the Fed too, because ultimately, let's say that I become Fed chair, and which would be horrible.
Congrats.
Well, you're welcome. Let's say that I become Fed chair, and let's say that I became Fed chair in 2022 and actually hiked interest rates 5% at the start of the year. It's a big risk. It's fine for me to say, hey, here's what I would do when I'm not sitting in the chair. Would I actually have the chutzpah to go out and be like, you know what? Screw it. Fire all the torpedoes. We're going to do it. I don't know if I would if I'm actually in the chair.
Yeah, and it's a long-running institution with a lot of history of the very big mistakes that were made over the course of the year, and everyone that is going to take the role is very aware of the mistakes that were made over the years.
The reason we all remember Arthur Burns is because of the inflation that happened on his watch, not because he was a brilliant economist beforehand. It's the same as Bill Buckner. We don't remember that Bill Buckner was actually a very good defensive first baseman. We remember Mookie Wilson's ball going under his legs and going, oh no! And that's the thing about being Fed chair, is ultimately the ones that are remembered are usually the ones that screw up. It's like offensive linemen or kickers or anything else like that.
Yeah.
You want to be a Fed chair who is not remembered, but is still paid very highly on the speaking circuit after you're done.
Yeah.
Ben Bernanke.
Yeah.
No one really thinks about Ben Bernanke a whole lot anymore.
No.
It's just okay, he was there. Let's take a quick break. When we return, let's see, we talked tariffs a little bit already. We're not going to do that. We're not going to do that. Condo market?
Yeah, let's talk real estate
let's talk condos after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. This is a message for families who've been putting off their estate planning from the elder law attorneys at Cushing & Dolan. One of the biggest myths about long-term care is that if you didn't plan 5 years ahead, you're out of options. That's simply not true. When a health crisis hits and a loved one needs nursing home care, many families panic and start writing checks for care that may cost over $10,000 a month. The reality is, there may still be meaningful legal options available, even when planning starts late. Cushing & Dolan have just released a new guide called Long-Term Care Planning for Procrastinators. It breaks down what the 5-year look-back really means and what steps can still be considered before making decisions that can be incredibly costly. If you're worried about protecting your family and securing your financial future, call Cushing & Dolan at 866-848-5699 to get your free guide today. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
Wall Street Journal's got a piece. It's titled "The Condo Market Hasn't Been This Bad in Over a Decade." And condo prices had their largest annual decline since 2012, falling 1.9% from a year earlier in September and October. Big reasons why. Fees. That's the reason. So here's the thing. If you look at where most condos are, just from like a pure numbers perspective, not what place is the highest percentage of dwellings that are condos, but it tends to be dominated by the Southeast. And
okay, so I was going to say that. Like, are we seeing a condo problem or are we seeing a Florida problem?
It's a Florida problem.
Okay.
But it's twofold, because part of it's Florida, in that, look, you've, been overdeveloped and people, built based on, expectations that the migrations from 2020 and 21 would continue, and they haven't. But the other piece is because of changes that have happened to the laws down there, you have these monster assessments that are being levied on a lot of these high-rise condos. It's not a factor if you're in, a condo that's just single-family dwellings. But the other piece that is a factor on all of these is the master insurance policies for these condo communities are either A, going through the roof, or B, saying, no, we're not going to cover hurricanes anymore beyond like X cost, but you still have to pay up for it just because you need to have a master policy of some kind on the overall community.
Yeah, I guess the interesting piece to me would be if we studied this in a city-by-city basis, are we seeing condo prices hold up worse compared to single-family in Portland, Maine, and New York City and Boston, or is this a real conversation of, the Florida housing market is in very rough shape, and a big portion of that happens to be condos?
I think it's that.
I tend to think so as well.
If you've been dreaming about a getaway that feels far away but easy to get to, well, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England? It's easy. The U.S. Virgin Islands are part of the United States, which means no passport is required and there's no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water. In your evenings, enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today at visitusvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
The Kraft Group reaching deals with Boston and Everett to be able to move forward with plans for a soccer-specific stadium for the New England Revolution. This would be some money heading to those cities in order to pay for improvements related to traffic and pedestrian access. What I can tell you is I lived for a while right next to where this is going to be
in Somerville, right?
Built. Yeah, I was in the eastern part of Somerville. And what I can tell you is you cannot get 25,000 people to that stadium without causing all kinds of problems right now. The mass transit that goes through there is on the other side of the Mystic River with no direct pedestrian bridge access right now. So you basically either have to walk a 1.5 mile loop then in order to get there, or take cabs or buses or something. Either way, it gets very messy very quickly. But ultimately, this is solvable if you actually just spend money to build the pedestrian infrastructure that you need. But I think...
When's soccer season?
March? Not anymore.
Oh.
So MLS announced, I think a couple months ago, that they are moving to unify the MLS schedule with the international schedule in order to basically line up windows of transfers and stuff like that make it so that it works with other leagues in the world. So I think it's either beginning next season or the one after. Like most European countries, it's going to be a September through May, June event.
Water taxis are out.
Now, you're not going to have games in Foxborough, in Boston in January. My guess is they go on some lengthy road trips during the month in order to avoid playing in
snow,
8-degree weather.
Yeah, because this thing doesn't have a roof from what I saw.
No, but ultimately, I think this is a fantastic development, but there's going to need to be some work done in order to be able to actually get people to this location. So I think it'll be a real net positive for soccer in the New England area.
In a decade when it's done.
But there's some work to be done still on this. Let's take a quick break. Coming up in just a little bit, we got hour 2. Stick around.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled How to Apply for Social Security and Medicare. Mike, when we talk about actually determining when to apply, there are a few different factors that go into it, but I think really the specifics of, hey, if I want money at date X, when do I apply is kind of at the crux of this.
Oh, sure. And, oftentimes when you go to apply, they will actually tell you that they're backdating your application to the date that you apply. And so your first check might include a few checks of Social Security. You do have to be specific about when you request the actual start date. The good news is you do get a prorated increase for, we talk about this in years, but you do get a prorated increase for every month that you end up delaying your Social Security benefit, and you can be highly specific about when you actually want the income to start.
How does one go about determining what age they actually should start Social Security?
Yeah, look, every actuary out there will tell you this is all a life expectancy question and calculation. I'll tell you there's more to it than that, but it is highly specific to each individual. When am I retiring? When is my spouse retiring? When do I actually need this money to kick in? And what is my backup plan for covering my expenses if it doesn't kick in right away? So yes, life expectancy, a major factor in the decision, but there are other questions to be answered as well.
Our guide is titled How to Apply for Social Security and Medicare, and the ways that you can request it, there's 2 of them. First, you can call 800-393-4001. The second way, you can go to armstrongadvisory.com. Again, that phone number is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday. until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here on the first trading day of 2026. Hope you all are off to a great start this year, but I got to tell you, markets, no
Santa Claus rally.
No, they're going flippy-floppy.
Big one on Monday if you're going to get anything out of this one.
Yeah, which, again, who knows what's going to happen on Monday, because quite honestly, today, pretty low volume day.
Sure.
I got to be honest, I'm a little messed up today, more than normal. You know, it's not Friday.
Yeah, I thought yesterday was Saturday.
My alarm went off this morning.
I have work tomorrow? What?
Yeah. My alarm went off this morning. I'm like, oh, good, it's Monday. And then I'm driving in. I'm like, wait a minute. I don't have to work tomorrow.
Not a fan of this holiday schedule. Not a fan.
I kind of am, actually.
Oh, I know.
I enjoy having weeks split up by back-to-back holidays.
I don't like it.
Makes it rather quiet. I'm a fan as well, but yeah, I mean, look, consuming your body weight in alcohol and sugar over the course of the last week and a half will do that to you.
How's that different from any other week?
Yeah, fair question.
What?
Your body weight in alcohol, that would be a lot. Because you're not just talking about
sugar.
The sugar. Well, that's a lot of sugar, too.
Yeah.
Mm-hmm. What do you think is worse for you, your body weight in alcohol or body weight in sugar?
Sugar.
Alcohol is technically a kind of sugar, I believe. Trick question. In any case, markets right now.
We're good.
Well, here's the thing. If you have your body weight in alcohol, you're not alive. So it's probably
Gemini.
that.
Gemini will tell us.
Oh, yeah, Dr. Gemini. What do you have to say on this? Okay, while we're on the tangent, did you know that in Utah, Most states, it's ABV, alcohol by volume. Utah is ABW if you're brewing. It's alcohol by weight. And because alcohol weighs less than water, you actually get they limit the alcohol concentration, but it's by weight, not by volume. And so you actually get more than the equivalent ABV.
Gemini's telling me that consuming your body weight in alcohol over the course of a week is almost certainly fatal.
Yes,
That's
I
your
believe
opinion.
that. But likewise, if I had 170 pounds of sugar, I can't imagine that being good for me either.
Yeah. Well, don't know until you try.
And don't.
Neither one's great. The S&P 500 down 8 points, about 0.1%. The Dow was up 47 points, about 0.1%. The NASDAQ Composite down 72 points, 0.3%. Big reversal in Mag 7 names over the last 20, 30 minutes. Haven't seen any news driving it, but this is kind of what we're seeing here as of this point. 10-year Treasury up 2.6 basis points to 4.179%. So just continuing to flutter in that 4.1 to 4.2 range. Dollar index down 0.12% to 97.92. We've got gold up another $7.80 an ounce to $43.48.60. And we've got crude oil down 65 cents a barrel to $56.77. And the AAA National Average for gas price is down another 0.3 cents. We're at $2.83, so continuing to see falling gas prices nationwide, which if you happen to be listening to us on the road and you don't work in the energy industry, you're very appreciative of. Those who work in the energy industry are kind of
Yeah, just a good grunt. I'll just throw out there that if we don't get a reversal on Monday with stocks up, be prepared for all the articles that are going to be written on Tuesday and over the course of the following few weeks about what happens when you don't get a Santa Claus rally historically and what you should do with your portfolio now. And I urge you with the strongest sense to ignore all of them.
It'll be the lead of the show on Tuesday.
Yeah. So if that happens,
will stocks
we
ever
will
make money again?
And ignore it. Yeah.
What to do when your portfolio's down for 4 days.
Right? Remember, this is precisely what happened last year. It wasn't a Santa Claus
No, it was 2
rally.
years ago, I think. It was 2024.
I don't remember. But the first 5 days of the year were bad.
It was
Everyone
January 9th.
started writing.
People were like, what?
About how when the markets go down for the first 2 days of the year, everything terrible happens. And then we got double-digit returns, of course.
Gotta say, I'm glad that you brought this up to a certain extent. If you look at S&P performance just on an annual basis here in terms of what we've seen recently, we gotta be honest. 2023 up 24%.
Yep.
2024 up 23%. 2025 up 16%. That's some back to back pretty darn good performance. The only string in recent history that has continued kind of beyond a 3-year stretch of anything like this, I know you don't want me to say it, it's the tech bubble. Aside from that, the next closest one that we have was 2019, 20, and 21. And I think we can all admit that 2020 and 21 might have been caused by a fiscal stimulus that isn't coming back anytime soon. But you look aside from this, it's pretty much tech bubble or bust in terms of 3-year stretches that you have, in this kind of company. The only other thing that's maybe comparable, and again, I say maybe just because you really got to cram most of the performance into 2 years, is 1954 and 1955, where you went 45% and then 26% back-to-back years. Other than that, we're in pretty rarefied air. And that's why I really wanted to cover the piece talking about how retail traders are this new,
So let's cover that piece.
Okay, let me go get it because I put it somewhere. Do you have it?
Yeah, there's a Wall Street Journal piece that everyday traders have gone from the fringe players to dominant market force. They drove major returns and reversals in markets this year, last year, for instance, during the tariff-related fiasco in markets in April. They are being held responsible for some of the big rallies in commodity prices and, certainly You can point to them over the last few years during the 2021 meme craze. And so are they some now permanent fixture, or are they just waiting to be washed out with the next crisis?
Yes. And what I mean by that is I do think so. You saw these pieces published during the tech bubble as well about, all these people that, started making more and more money trading and, blah, blah, blah. And, it's a new paradigm and it's a new world. And, this was back when E-Trade was, kicking down the doors and giving average people access to markets that they didn't have before. And I do think it's true that this is going to be a group of people that does continue to grow and trade more and become more of a force. But here's the other thing. This is also happening against the backdrop of one of the best 3-year returns in markets that we have ever seen. And they don't ring a bell at the top, but they do write articles. And this is the kind of stuff that you start to read when people start getting a little too exuberant and a little too confident that they are doing something, as opposed to conditions have existed that have enabled them to do something that might not exist permanently. So if you're out there and you believe that the market is going to return 20% annualized going forward, you're a little bit more optimistic than me. You just are. Because ultimately there are two ways for markets to return 20% in a year. Earnings have to go up by that much, or multiples have to expand.
Yeah.
And eventually you run out of ways for earnings to go up that much while actual humans can still have money to spend. And likewise, you get to a point where multiples expand to the point where people say, nope, that's good. I finally had enough. I'm not saying that we're done. Maybe you do have another 20% year this year. It's possible.
Sure.
The tech bubble had a 5-year stretch where it averaged more than 20% for the S&P 500. So this could continue, but it won't be forever.
Nothing's forever, Chuck.
And that's my point is the success that these retail traders have had the last couple years is not going to be a permanent fixture because markets just aren't going to do this forever. They can't. I wish that they could. It would make all of our lives a lot easier and better. But I just don't believe that that's going to be what we see. Quick break here. When we come back, we've got trivia, and then we're going to be talking about Social Security and midterm elections. Why does this matter? We'll tell you right after this.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001. Or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This is a message for families who've been putting off their estate planning from the elder law attorneys at Cushing & Dolan. One of the biggest myths about long-term care is that if you didn't plan 5 years ahead, you're out of options. That's simply not true. When a health crisis hits and a loved one needs nursing home care, many families panic and start writing checks for care that may cost over $10,000 a month. The reality is, there may still be meaningful legal options available, even when planning starts late. Cushing & Dolan have just released a new guide called Long-Term Care Planning for Procrastinators. It breaks down what the 5-year look-back really means and what steps can still be considered before making decisions that can be incredibly costly. If you're worried about protecting your family and securing your financial future, call Cushing & Dolan at 866-848-5699 to get your free guide today. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange, and Warren Buffett has officially left his position as CEO of Berkshire Hathaway. The 95-year-old has famously survived and even thrived with his preferred childlike diet. He drinks 5 12-ounce Cokes every day. So, trivia question today. Where does Warren Buffett get his breakfast from every workday? Once again, where does Warren Buffett get his breakfast from every workday? Be the third person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you'll win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
This fall in November, Americans will head to the polls for midterm elections. And is it 33 or 34 senators, this one? I can't remember which class this is.
Don't know.
In any case, the 33 or 34 senators who are elected this year will serve 6-year terms, just like every other senator does. The difference is that Social Security, the trust fund, is expected to become insolvent
6 years from now,
late 2032, at which point the senators that are elected this fall will still have to deal with it. So what's interesting to me is you look at all of the chatter and all of the, things that people are talking about from a political perspective right now. Does Social Security get mentioned once?
Not on the list.
And this group of senators will actually have to be instrumental in determining what the program looks like beyond 2032. Now, you might say, oh, Chuck, they're not going to do anything. They're lazy and they're not even going to hold a vote on it. That's fine.
That's still a decision.
That's still a decision that they're going to make.
Yeah.
But ultimately, there's no one else who is occupying office at the moment that you can guarantee will still be occupying office at that time, aside from these 33 senators.
I suppose something weird could happen where the trust fund doesn't run out by 2032, so no way to guarantee that. You'd have to see probably a big economic boom over the course of the next 6 years.
Generally, fiscally, we've been on a 25-year path of worsening, and so
it'd be very surprising if it reversed course. I just want to acknowledge this. Not technically a guarantee; it's an estimate of when it will run out. I'd be willing to bet it runs out sooner, but
like when I started
we'll
this job, I think it was 2034 or 35 that it was projected to run out, and now we're at 2032.
Kept getting worse. Quote from Senator Mark Warner, it's been disappointing that we have kicked this can this long. That's from one of the senators who co-sponsored the Social Security Fairness Act, which worsened, not bettered, the situation for the Social Security Trust Fund. Plenty to blame to go around there, by the way. That was a very heavily supported bipartisan vote. I think 70-plus votes for a yay on that one. But yeah, it is a looming issue, and this will be the first group of elected senators that will actually need to address it during their tenure.
Trying to see,
and my guess, by the way, is it's tackled in 45 days prior to the actual run out of money.
Trying to see what the Social Security Fairness Act actually passed by. Yeah, it was 327 to 75 in the House and 76-20 in the Senate.
Yeah.
Again,
we can talk about the fairness of it and why that should have been done, but the clear mathematical result was that the trust fund will run out of money a little bit sooner than it otherwise would have, because all you did was increase benefits for a group of beneficiaries.
Which, interestingly, the reason why the Social Security Act had the stuff that they removed in it was in order to try to make it more sustainable back in 1983. So, look, this is why we're screwed. Okay, here's the thing. You can't just have all the fun stuff. And all we want to do is have the fun stuff. Yeah. And I don't blame anyone who's, getting more money because of this now. It's not your fault. This is all of our faults. We've all kind of screwed up on this because
we consistently elect people who overpromise us things.
It's not even that. I don't think they do overpromise us things. I don't think anyone really believes that anyone elected to Congress is going to do anything at this point. I don't think there's high expectations there. I think the problem is that we're just unwilling to deal with anything getting worse in the short term in order to make it better in the long term right now. And we're just really impatient to the point where it's if we feel the slightest bit uncomfortable for a couple of months, we lose our minds.
Yeah, the famous quote, "Ask not what my country can do for me, but what I can do for my country." It seems almost unrecognizable.
I thought you were going to go Churchill on me.
Yeah, it seems almost unrecognizable in
Churchill is,
society.
you can always count on Americans to do the right thing after all other options have been exhausted. It's kind of where we are politically. We're just Social Security is going to run out of money in 6 years, and benefits will have to be reduced unless we change course. And no one's talking about it for midterm elections.
Correct.
No one's talking about it. Have you heard the word Social Security once aside from no tax on Social Security?
No. To be fair, I do my very best to not pay attention to political ads.
Well, I don't either, but
I don't hear it anywhere.
Mike, think about what we read. Not even from a political sense. Think about it just from the problems that we hear about economically. We hear about affordability, which is, a real problem. We hear about K-shaped economy.
Yep.
We hear about a slowing job market, and we hear about a sluggish housing market.
Yep.
Those are the bad things. The good things that we hear about are, AI is booming and
AI is booming.
AI is booming.
Yeah.
But does anyone look at Social Security and be like, hey guys, in 6 years, we're going to have a real problem here. No, like, this is the first time we've talked about this.
Chuck, in politics, 6 years may as well be a century.
The problem is that it's just...
I recognize it's not.
Mike, if we had fixed this when I was born, it would have been so easy. It would have been like, raise Social Security taxes by 0.1%.
Yep.
And now it's going to be like, donate a vegetable farm each in order to figure out how to, like, make the program solvent.
Nope, just blow out the deficit. That's what they'll do. Even more.
It's just a little discouraging to me as someone who would like to see a little bit of fiscal responsibility. The fact that you have senators who voted to worsen this saying, oh, this could be a problem.
Really disappointing.
It could be. Quick break here, and Wall Street Watch and the Trivia Answer next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long long as you report it on your income tax return and prepare a personal care contract. Make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, LegalExchangeShow.com. Once again, simply call 866-848-5699, or get it from their website at LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, some choppy trading to begin 2026 after an early rally was a race leading to a mixed and mostly flat market at the moment. The Dow is up 0.3% or 151 points. S&P 500 is edging 4 points higher. NASDAQ dipping by 9 points. It was up over 1% in early trading. Russell 2000 is up over 0.5%. 10-year Treasury yield up 3 basis points at 4.183%. And crude oil down about 1% lower, trading at $56.76 a barrel. Tesla down over 1% after the EV maker reported just over 418,000 vehicle deliveries in the fourth quarter, down 16% from a year ago. Wall Street analysts were expecting about 426,000 deliveries. Sticking with auto, where Chinese car maker BYD saw its sales growth slow significantly in 2025, but is still set to top Tesla as the world's biggest EV maker. BYD stock climbed to over 3% on that news. Meanwhile, several furniture stocks are garnering attention after President Trump delayed a 30% tariff hike on upholstered furniture, kitchen cabinets, and vanities. Wayfair and Williams-Sonoma are now up over 5%, while RH shares are now rallying 10%. Warby Parker stock is up 3% after Loop Capital named the eyeglasses maker one of its top picks for 2026, citing the firm's expanding EBITDA margins. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question, where does Warren Buffett get his breakfast from work every day? That would be McDonald's. Mike from Barnstable, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Mike. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
It's a new year, which means a brand new guide from the Armstrong Advisory Group. And when we were thinking about guides to create for this month, we really were asking ourselves, like, what are some of the most common questions that we get from listeners, clients, etc.? And by far, one of the most common ones has to do with Social Security and Medicare. And so we put together a brand new guide for January, how to apply for Social Security and Medicare. It doesn't only go through, what required documents you're going to need, like, your previous marriage history, work history, which you do need, but it also gives you some context for when should you apply? What are the different returns that you will see on your Social Security benefit by delaying those overall benefits?
What do you actually have to do to apply?
Yeah, like what is needed to file your application? What are the tax consequences of receiving Social Security income depending on where you live? And same goes for Medicare. What exactly does this stuff cover? What is the difference? A, B, C, D? How does all of this stuff work? For a lot of folks that are, already there, you've been through this. For anyone under the age of 65, you're likely getting your first introduction to it just as you get closer to that date. If you want to feel prepared in the new year and get ready for that next stage of life, please call the Armstrong Advisory Group and request your free copy of How to Apply for Social Security and Medicare. Again, it's our free guide for January, how to apply for Social Security and Medicare. You can get it by calling us at 800-393-4001. You can also request it online at armstrongadvisory.com. But that phone number, once again, for our free guide on Social Security and Medicare is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I want to talk a little bit about Warren Buffett. So,
95 years old and retired yesterday?
Yeah,
2 days ago?
2 days ago. So as of today, Warren Buffett is officially retired. And I want to dig in on this quote that he had because he's going to be doing he recorded a series of interviews with Becky Quick from CNBC.
Sure.
And this quote I think is interesting. He says, I think Berkshire Hathaway has a better chance of being here 100 years from now than any company I can think of. So the question that I would love to ask Buffett, and again, I don't think the full interview is available right now.
Who else is on the list?
Well, I have a few questions I'd like to ask. The first is, what do you think the chance is that Berkshire Hathaway is here 100 years from now? Because he's not saying, I'm 100% sure we'll be there.
Saying it's got the best chance of all the ones that are out there.
Does he think it's a 70% chance? Does he think it's a 20% chance? I don't know. The next one is, who do you think is your closest competition in that respect? Not in terms of, your competitors in business, but who do you think has, the right mix to be able to say, yeah, we think we've got a good chance of being here 100 years from now? And the other piece on this that I think is interesting is when we look at companies that have been dominated by one individual historically, there's not really the best track record of what happens when they're gone. There's a handful that I think you can point to and you're like, yep, they've been able to do well. Apple's one of them for the last, 14 years now, 15 years. It'll be this fall. But, you think about some of these other ones and, GE post Jack Welch and
frankly,
that environment.
Any of them you can think of, I don't know the tenure of any of those CEOs off the top of my head, but they have to be less than half of what the period of time that Buffett's headed Berkshire Hathaway.
Now, the question on this, Buffett historically, and again, this is all anecdotal, so I've never talked to Warren Buffett. I've never worked at any of his businesses. I bought a couch and some furniture from Jordan's Furniture once, but that's as close as I've ever gotten to Warren Buffett.
Yeah, I got an ice cream from DQ, so we're basically best buds.
There you go. You spilled it on my couch, and they don't own a cleaning service, so we couldn't help. But I think that when you look at the way they've built the company, my understanding is that Buffett has generally said, I don't want us to be involved in running all of these separate businesses. He lets them kind of run themselves. And so in theory, maybe that is what makes it so that he believes that him leaving isn't as important, is because these businesses have run themselves and all they did was invest in them.
Right.
But I just, 100 years is an eternity for a business. 10 years is a long time for a business. 100 years.
Yeah.
100 years
Society
ago, Band-Aids had barely been invented.
What had barely been invented?
Band-Aids. They were invented in 1920. So, I don't know. I wonder what Buffett would handicap as the likelihood that Berkshire's around 100 years.
Yeah, it might be 1 in 10.
My guess is he would say 20 to 25%.
Yeah. I'll give it to him. If diversification is the winning attribute there, then yeah, few companies have it better than that one.
Let's take a quick break. When we come back, we're going to be joined by Paul LaMonica from Barron's right after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visitusvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all 3 and enjoy the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com.
As promised, we're joined now by Paul LaMonica from Barron's, here to chat with us on the first Friday of 2026. Paul, how you doing today?
I'm good, thanks. Happy New Year, everyone.
And same to you. We're talking today about the dogs of the Dow. What are the dogs of the Dow, Paul?
Yeah, the dogs of the Dow are the companies in the Dow 30 that had the highest dividend yields the previous year. So the top 10, income producing, high yielding stocks. And, there's this notion that if you buy them, that group could outperform the market in the coming year. It's had a mixed track record in the past few years, but the Dow dogs did outperform the broader market in 2025, and it's going to be interesting to see what happens this year, because 7 of the 10 companies that were dogs of the Dow in 2025 are once again still high yielding enough to be dogs of the Dow this year. There are 3 stocks, Cisco, IBM, and McDonald's, that are leaving this group, and they're being replaced by 3 that were underperformers last year that maybe could turn around. Home Depot, if the housing market bounces back with interest rates coming down. United Health, we all know about their high profile problems. And then also Nike, which, I think is a bit of a turnaround story, hopes that their newish CEO can bring back, the former glory for that athletic apparel giant.
Paul, what's the historical relevance and development of this dogs of the Dow strategy? Can you tell our listeners just a little bit about what, why this matters, or does this matter historically?
Yeah, historically, the dogs of the Dow have done reasonably well, and the premise is that you are buying companies that are obviously already blue chips. They're among the 30, exclusive members of the Dow Jones Industrial Average. But in addition to that, you also have the income that you get from the high dividend yields that these companies offer. So even if you're getting a little bit of appreciation from earnings growth, you can also get some pretty spectacular, dividend, kickers as well. You look at the top 2 stocks in the dogs of the Dow. Verizon with a yield, well over 6%. And Chevron, has a yield, I think, north of 4% as well. So you take that, if you just get a little bit of appreciation from steady earnings growth, and you could be looking at, double-digit appreciation for those 2 stocks in particular, because of how high their dividend yields are. The rest of the dogs of the Dow, the yields aren't that high. They range around 2.5% to 3%, which is still, pretty solid, especially if you think bond yields are going to fall further as the Fed cuts rates.
Paul, you mentioned that in recent years, the strategy has had mixed results. Can you give some examples and talk about why that might have been the case?
Yeah, I think that in some respects, the companies in the Magnificent Seven that have been darlings of the market, a lot of them do pay dividends, and some of them are in the Dow now. NVIDIA, Microsoft, Apple, obviously, Amazon. But, Amazon not paying a dividend yet, but the other 3 do pay dividends. Their dividends, while steady and solid and are growing, they're not as high as what you'll get from, say, Merck, J&J, some of the healthcare names, in addition to Verizon and Chevron in the Dow. So, I think investors who have been really enamored with the AI trade and these earnings momentum plays, they don't particularly care as much about the dividends. It's nice that, a company like NVIDIA pays a small dividend, but no one in there is really buying NVIDIA as an income play the way they are with, Verizon and some of these stodgier Dow dog stocks.
Very good. Paul, appreciate you joining us. Hope you have a great start to 2026, and we're looking forward to chatting with you over the course of the year.
Thank you very much, guys. Look forward to doing this again next Friday.
That is Paul LaMonica from Barron's talking about the dogs of the Dow.
Sure was.
Over to you, Michael. What do you have for me?
Wall Street Journal reports that parents are going broke from their kids' sushi obsession. Can confirm. Can confirm. It surprises me. I don't think I had sushi as a kid until, I don't know. Maybe I was like 18 or something along those lines.
I might have been like high school, college.
Wasn't readily available in most towns. Today, most certainly is. I can attest that if
you go to any grocery store today, and there's
sushi
like
everywhere.
a thing there, you know?
I can attest that if I ever ask my kids what they want to do for dinner because we're doing takeout, 100% of the time the answer is sushi.
Interesting.
100% of the time the answer is sushi.
So they're opting for what? Like tuna? Like
salmon avocado roll and California roll. Those are their orders. They will then pick at all the stuff that I order for myself, but 100% that is what they order. And it is expensive, but you know what? It's also a lot healthier than the other things that they would like to eat, like a chicken patty sandwich or pizza. And so,
what's wrong with the chicken patty sandwich
or pizza?
Again,
what's wrong with the chicken patty pizza?
Nothing's wrong with either of them, but compared to sushi, I would consider them to be a little bit less healthy. And so, I guess I'm willing to pay the price within reason. We try not to do it more than like once every other week, but it is a change. I mean, because of this, I'm expecting. I already see a lot more sushi restaurants, but what's probably coming is like faster food sushi chains would be my guess.
Oh yeah, how's that going to end badly?
That's like the Chipotles of sushi. I think are coming for 2026.
Let me get your thoughts on this, Mike. There's an establishment by me, very nice establishment. On Sundays they offer half off sushi. Thoughts? There's a reason it's half off.
Yes. What happened to the half off? What happened to the half on?
I'd eat
because they get a new shipment on
Monday
or Tuesday. I've done it 3 times and I was fine.
Yeah, I'll mainly stick to the California and Philadelphia rolls, but I'll go for it.
Okay.
Yeah,
just curious.
Yeah, good question.
But
I mean, you go to Japan, like you get sushi at a 7-Eleven. I think that's more what's coming for the United States.
I got to be honest. Like I've eaten a decent amount of sushi in my life. Have never had a problem from it.
No, I haven't either.
Nor have I.
On the other hand, I've eaten a decent amount of oysters in my life. Have had several problems from them.
Zero problems from oysters.
Have had several problems with them. One to the point at a wedding where I was so violently ill I had to leave the wedding. It's thankfully not my own.
That was quick.
Yeah, it was not good.
The article describes these kids saying they are like savages and also can confirm. The quantity of sushi they eat in such a short period of time is stunning. And these kids my kids are 7 and 9 years old.
Yeah.
So.
Yeah, I mean, look,
they're savages in every other way too, though. So that part's not surprising.
Here's the problem: is you take a kid being able to eat a pint of blueberries in a sitting, and now you picture a pint of sushi, and you're like, "Yep, they can do that."
Yeah.
So I understand that. I don't know. We're still big, pizza fans in our house at this point.
We had pizza last night, but if I ask my kids what they want, it's sushi.
Interesting. Mine are younger. We haven't quite gotten there yet.
Yeah.
My 2-year-old would look at it and be like, "Oh, fishy, haha!"
Yeah.
But we're not quite there yet, and I guess we'll wait. I don't think you're supposed to feed a 2-year-old raw fish.
Not 3 times a day. That'll give you mercury poisoning. Yeah.
Oh.
Yeah.
Got it.
Gotta be careful of that.
Got it. Let's take a quick break for. It's actually the weekend. It keeps feeling like a Monday, but it's Friday. So we're going to
take a great weekend, everybody.
Yeah, we'll take a break
New
for the
Year.
weekend. We'll see you on Monday.
Happy New Year. It's the only time you can say it.
That too.
I'll be saying it for the next 3 weeks to anger Tucker.